As the Fed and the inflation narrative start to take a back seat, the labor market will be of forefront attention to investors, with the non-farm payrolls data being released today. Earlier this week, US job openings fell to 9.6 million, the lowest level since April 2021, and led mostly by a decline in manufacturing, hotel, and restaurant-related openings. Despite this, layoffs continued to ease whilst the quits rate remained at 2.6%, which is above the historic mean of 2%, therefore indicating continued labor market tightness. ISM manufacturing declined for the ninth straight month, falling to 46.4 due to weak demand within the US and abroad, which continues to be a headwind for manufacturing exports. This could be explained by a shift in consumer preferences to a more services-based economy represented by the resiliency in ISM services. However, we do expect this to be the last shoe to drop, as services remains the stickiest area post-pandemic, whilst the cumulative impact of higher interest rates and a depleting excess savings is likely to weigh on the consumer. If this were to play out in the coming months, investors may find select opportunities in long-duration risk assets, such as growth equities, as the market starts to anticipate lower longer-term interest rates. Looking at the US Treasury yield curve, we observe an inverted bear flattening trend, with shorter-term rates rising faster than longer-term rates. In particular, the 3-month to the 30-year spread has widened a further 77 basis points year-to-date, leaving the inversion at a negative 121 basis points, suggesting longer-term economic weakness ahead. As macroeconomic conditions worsen, investors can start to anticipate a bull steepening yield curve where short-term rates fall faster than longer-term rates, which has historically marked the start of a recession. Year-to-date, the correlation between Bitcoin and the 3-month to 30-year spread is 14%, with the 5-year correlations remaining near zero. However, correlations have dipped into negative territory during times of credit distress, more recently with the spring banking crisis and the debt ceiling standoff in May. What this highlights to investors is the characteristics of Bitcoin as a diversifier within the portfolio, particularly against economic concern that is indicated by an inverted yield curve. Follow CoinShares for more insights.